Well, Brigade Enterprises reported a strong set of numbers for the second quarter. Pricing is up 9% sequentially, and there was good improvement in commercial sales as well. The hospital occupancy is at a 5-quarter high. Pavitra Shankar is managing director of the company. He's joining us right now to take some questions. Pavitra, good morning. Great to have you with us here. Thank you very much. At the outset, let me wish you, your family, your team a very happy Diwali from all of us, in case I don't get the opportunity towards the end.
Happy Diwali to you all.
Thank you. Thank you very much, Pavitra. Let's just start by talking about, just give us a real-time sense of how strong demand is as we are in the third quarter now. And give us a sense of the full year. How is it panning out to be? Will you be able to do 5,000 crores in sales for the year?
Hi, good morning. Thanks for having me. The year's looking fantastic on all fronts. Residential's been doing great. Of course, the demand on ground from customers is really good. All of our new launches are doing excellently well. Under construction inventory completed across the board, the demand is really fantastic, not just in terms of sales velocity, but also pricing. So we've been able to increase pricing and there's no reduction in terms of demand from the customer on that front. So the outlook is also pretty good for the rest of the financial year. And as far as we're concerned, we are pretty bullish on the residential market for the next couple of years as well. So we are going strong in terms of launching projects, adding to the land bank, launching and moving from land bank to the launch pipeline. On the hospitality sector also, it's a really very good bright spot after some tough times. So all the hotels are doing at very good occupancies, and the average the ARRs have been improving as well. So upcoming wedding season should be pretty good for the hotels. So we are expecting hotels to do well too. On our leasing side, of course, collections, revenue, all that is going smoothly on both the office and the retail. Retail consumption has increased. And again, we're seeing the festive season. So we're expecting good things for the malls, which we're seeing in terms of footfalls as well. So only on the leasing side, we're chipping away at it since we have SEZ space. And of course, it's not looking like there's some major movement on the regulatory shift for the SEZ regulations. So, but we are still able to lease out. This quarter, we did about 0.3 million square feet in our remaining space. So I think even the leasing is going on a good front. So on all things considered, I think it's good times. We posted a good quarter supported by registrations as well. So that flew into the revenue numbers also.
All right. Hi, Pavitra. Good morning. Good to hear the commentary that you're giving us. And you're clearly sounding very, very optimistic. And as you said, bullish about the future prospects. Let's get a couple of numbers going, though. The sales number, will it do more than 5,000 crores for this year? Point number one. And realizations have moved up by around 8 to 9% on a sequential basis. More price hikes in store?
Yeah, so, the way we look at price hikes is, seeing what is possible from an inventory movement standpoint. It's, of course, important to move the inventory at a price that we think is fair, and then see if we can take up pricing and it's accepted by customers. And so far, that has been the case. And we think that it should continue on that front. In terms of sales numbers for the rest of the year, it's highly dependent on launches. We have about 6.5 million square feet of launch for the rest of the financial year itself. So a lot of our launches got pushed into the second half. So assuming all of that comes in, I think we should be in a good position, while I'm not necessarily commenting on the total value per se. But that's the hope that that's the idea. Once we get the launches, I'm not worried about what the sales will be.
Okay. But overall, you of course gave us a view on Brigade itself, but overall, how are you seeing the market, the residential market? Pricing has gone up for you, which means that, despite the kind of oversupply that we're seeing, the massive urbanization, pricing is still looking good, right? But now there is this issue that metro cities are facing, where on one hand, there's rapid urbanization, on the other hand, there's so much pollution. So the fear is that people will start moving out of metro cities. Do you think that could sort of restrict growth in the metros in the near future?
We'll have to see over time. Naturally, the kind of huge metropolises that we have does require a lot of planning on the authority side in terms of urban planning. Town planning authorities need to put in a lot of these measures. Despite that, we are seeing, people moving back from the tier 2 cities. The thought process during COVID and immediately after that was that we would see a lot of people moving out from the large metros. But as work from home has moved slowly to work from office or hybrid, we've seen a lot of people come back. You can see that in terms of just the rentals across, the stories are quite notorious, say in Bangalore or wherever, in terms of rental price hikes or just trying to find an apartment. So I think that naturally tends to increase the demand for people looking out for their own homes. And so far, interest rates have also stayed stable for the last 6 months or so. The repo rate hasn't been increased, so therefore interest has also been, the mortgage rates are the same. So I think right now customers are just looking for the right quality, the right developer to go with. And when a launch comes out from someone like us, they're basically ready to book and make sure that they get the right unit that they want, because they're thinking about end user and occupancy. So therefore pricing is more of a second situation.
No, I take your point, but my only limited point here is you'll have the right quality in terms of the builder, but what if you don't have infrastructure? There's so much pollution, you just want to rethink your decision of spending that top dollar on premium housing, and you'd rather sort of move to a place where there's lesser pollution. Okay, that's a discussion for another day, but let me get back to the business, right? Leasing has improved this time. Of course, this was after weakness that you saw in Q1. So can you tell me, what is the annual exit rentals that you're looking at?
So as of half year, we've done around a little under 400 crores. So that should stay on track, because a lot of that will just grow at a stable rate. Some of the new leasing will just need to burn off the rent-free periods, and the lease rental will have to come in. But stabilized on an exit rental, we are looking at maybe 750 crores as a total rental portfolio today. That's with the operating assets. Sorry, that's with the operating assets that we have as of now. We also are constructing some. We are constructing some new office buildings. So once those also get rented and leased up, those will add about 180 to 200 crores on the top line.
Pavitra, very quickly before we let you go, there was a change in the Karnataka government. Have state approvals started coming through smoothly, or is that still a bit of an issue?
It's been a bit of a mix. Some things have happened smoothly. We are seeing a slowdown or just sort of a holding period in terms of some of the approvals coming through. But there are discussions, constantly on trying to push a lot of that. I think there are meetings that need to happen, for the authorities themselves. So yeah, we are seeing a bit of slowness on the approval side. Things had picked up after the government had just come in. It stabilized a bit, but now somehow we're seeing a few more delays. So hoping that it won't impact the rest of the launches that we have planned for the rest of the financial year.
Okay, all right. Thanks a lot for joining in, Pavitra, and all the best for the quarter to come. Thanks a lot for being with us.